Good morning, friends. Welcome to Adda 24/7. We are in selection MCQ series for BFM, and presently we are going on with the important series of probable questions for your CAIIB exam coming June 23, right? So today we are in chapter 5. We are continuing. This is part 2. Yesterday I had covered part 1. Okay, so we are continuing with the same series and same topic. Tomorrow also we will be having part 3, very important ones. So follow the video completely, and I would suggest follow the series completely. Okay, so topic is facilities to exporters and importers, and this is part 2. Okay, mind well, part 1 has been completed yesterday. Today we are doing part 2. Okay, so follow it completely. Okay, so post shipments, here yesterday we had completed up to E. Okay, so what is the first one now? Post shipment finance is essentially an advance against. Yesterday I had covered what is post shipment finance, right? Pre and post I had covered both. Pre means the finance is given before the shipment, means this includes manufacturing, raw material, labor, up to the part I make the shipment. On board BL up to the time I get. Okay, once I get on board BL, then it becomes post shipment. So this post shipment is given against what? Okay, firstly understand post shipment is always given 100%. Okay, pre shipment is generally given 80 to 75 to 80%. Pre shipment, that is pre. Okay, and post is given 100%. Okay, so what is it against which this post shipment is given? Post shipment is given against the money which is to be sent by the buyer. See here, this is a shipment, this I am the exporter, right? And this guy is the importer. So once I ship the goods, to this guy, send it to this goods. Okay, so this person should send me money, right? This person will send me money. This money is called as what? Receivables, right? Means receivable. So this finance is always given against receivables, means whatever I have to receive from that importer. So post shipment finance is always given against receivables. Okay, second one, in case of rupee finance, bill is to be purchased, discounted, negotiated at appropriate dash rate. Now what is this? At appropriate dash rate. So which is this dash rate? Who can give me the answer fast? Let's see. In case of rupee finance, it is to be this bills are to be purchased at appropriate dash rate. What is this? Okay, I'll give you few options. Okay, bill buying. Okay, let's see the options. Bill buying and bill selling. Okay, only two options. So this, in case of rupee finance, bill is to be purchased at appropriate bill buying or selling rate. What do you say? Let's see how many of you can answer. I had given you few hints while solving earlier. If you are following my series completely, I have covered certain numericals. In that I had given buy, sell, what is to be taken. See, a rupee finance is done for which type of bill? Is it for import or export? Firstly tell me that. Is it for import or is it for export? Who can tell me? Is it for import or is it for export? First tell me that. Type in the comment section. Is this for import or is this for export? Type fast. Everyone. Type in the comment section. Yes, it is export. Finance is always done for the export bill. Okay. So this, once you know this is export, then for export what did I say? We use which rate? Buy or sell? Which rate do we use for export? Buy or sell? Buy or sell? Buy or sell? There are only two rates, either buy or sell. So remember, for exports we always use the buy rate, and for import we always use the sell rate. Always, never forget this basic. So I'll be doing this at appropriate bill buying rate. This is the exact answer. Bill buy rate. Buying or buy, you can write it. Okay, bill buying rate. So this is the exact answer. So in case of rupee finance, bills are to be purchased, discounted or negotiated at appropriate bill buying rate. What is this purchased, discounted or negotiated? Where is this done? See here, side bills are always purchased. Shall I write it somewhere? Okay, one sec. Side bills are always purchased. Okay. Then which is discounted? Discounted is always collection bills. Discount is always done for collection. Collection means the risk is not covered by any bank over there. Okay, bank is just acting as a conduit for documents transfer and money transfer. Negotiated. Negotiated means it is under LC. Whenever you do an LC transaction, this is negotiated. So got it? Got the clarification? Everyone got this clarification? Means when is it purchased? Side bill is always purchased. When it is discounted, collection bill is always discounted. And when is it negotiated? Under LC bill is always negotiated. So these terms should be clear to you in your mind, because these are the basics of any BFM or any trade finance or any export import, right? Got it, everyone? Clear? Type yes in the comment section if you have understood it up till now. Type yes, everyone. Have you understood what is purchased, what is discounted, what is negotiated? Have you understood what is to be done for export and what is to be done for import? Where is buy and where is sell? Have you understood where do we do how much finance do we do for pre and how much finance do we do for post? Clear? Type yes. Chalo, move on. I must see these yeses. Everyone like the video first. Please like it. So because what happens, the buffering becomes easier, isn't it? So like the video first. Okay. Dash of documents takes place when export documents are drawn under LC. What do you mean by this? Dash of documents takes place when what? When export documents are drawn under LC. So what takes place of documents? What did I say? Over here, look at this. Side bills purchased. Immediately the question came, isn't it? Those who have not paid attention, they won't be able to answer. So side purchase, collection, discount, LC, negotiation. So dash of documents takes place. What is the answer? Type fast in the comment section. Just now I showed you these answers. What is the answer? Discounting? Shall I write discount over here? Okay, let me write discount. Or who paid the attention? Or negotiated? Or purchased? Negotiation, we'll write it, isn't it? It's a noun form. Negotiation. So negotiation, discounting, or last one is that purchase. So what should I write it over here? Should I write purchase or negotiation or discounting? I'll write negotiation, because discounting was under collections, purchase was for side bill, negotiation was for LC. So that is the answer. Okay? That's why I said here. I just gave you this point and it immediately came over here. The NTP allowed at present is generally dash days for all foreign currency export bills. So what is the NTP allowed? What is NTP basically? NTP is normal transit period. Normal transit period. Okay, that is NTP. So what is the NTP allowed? NTP means what is this normal transit period? It means, suppose if I send a document, this is my bank in India. Bank, okay, B India, I'll write it, okay, India. This is my customer, exporter, okay. He sends the goods. Now he has given me the documents. So I'll send the documents to this bank in USA or whichever country it's. Example USA, okay. USA bank, I'll call it, okay. So I'll send these documents to this USA bank. Then this USA bank will receive the documents, check the documents, check, and send the payment or send a message. If the documents are not correct, they won't send the payment. If the documents are correct, they'll send it. So the period starting from here to all this further period, sending, reaching the documents to this bank, checking this, 5 days are required, 5 banking days, okay. So 5 banking days over here, and then they send the money, either money or wrong. If the documents are wrong, they'll send a message, the documents are wrong, we won't pay. So this is called as NTP. So NTP is generally allowed for dash days for all foreign export bills. So what is the NTP allowed? How many of you know? Let me see how many of you know. Is it 20 days? Is it 25 days? Is it 30 days? Or is it 45 days? So it is 25 days, everyone. It is 25 days. Got it? Something new? It is 25 days. Okay. Now before going ahead, download Adda 24/7 app on your mobile. In this app, you'll be getting all the latest study materials plus live classes, ebooks, tests, everything. Okay, whatever is needed for clearing JIB and CIB, you'll get it over here. Everyone like the video first. Those who have not liked up till now, if you have understood, comment in the write in the comment section understood or yes, whatever. Even if you write yes, I'll understand. Type fast. Okay. Next one, the present interest cap on PCFC EBR for 180 days is LIBOR plus this. What is this PCFC? But PCFC, many of us don't know PCFC only. So what is the interest cap? So it is packing credit in foreign currency. Packing credit. Okay. Packing credit means pre-shipment credit in foreign currency. That is in foreign currency. Remember, foreign currency. See here, always remember, packing credits can be given, even post-shipment credit can be given in two types. One is INR, second is foreign currency also. Both the ways it's allowed. So what is the maximum interest I can charge for 180 days of this PCFC? What is the maximum interest? Anyone? How many of you know? Yeah? The present interest cap on PCFC is, how many of you know? LIBOR plus dash percent. What is the percent then? Yeah, it is LIBOR plus 3.5. It is kept by FEDI. FEDI gives you all these rates. Okay, 3.5%. That is the maximum interest cap you can have. So I can't charge any customer inclusive of all my charges. I can't charge LIBOR plus 3.5. In fact, nowadays RBI has given the permission to remove this LIBOR, and they have gone for ARR, alternative rate reference rate. Okay, that is also a new topic for you. I have taken it in my paid classes. Alternative reference rate. This is nowadays followed by RBI. Why? Because if something happens to London, London goes down, economic crashes, then who will give the rates? Right? And there were certain flaws found in LIBOR. Means they manipulated the rates. That's what it was found. That's why RBI has given now that you follow ARR instead of single LIBOR. But still your books carry on with the LIBOR only. Okay. But LIBOR is gone now. Okay. Move on. Next one. Dash and dash are the two methods of financing exports. Oh, what is this? Dash and dash. Okay, I'll give you. You can answer anything. I'll give you 2-3 options. Okay. Term loan. Loan, CC, factoring, forfeiting. Now you have to choose two between these. Forfeiting. So which are the two which are used for financing exports? There are many. There is a pre-shipment finance. There is a post-shipment finance. So this is also allowed, but within these options, which is the correct? So the correct option is this: factoring and forfeiting. Factoring and forfeiting are the two methods of financing exports. Okay. So factoring and what is the difference between them? There is no slight difference. Factoring is always for a short period. Okay. Short period. Forfeiting is for a longer period. Long period. Okay. Factoring is always done for what? With or without recourse. It's either with or without. Forfeiting is always done without recourse. This is strictly without recourse. Recourse means you can't get the payment back from your customer if the foreign party doesn't pay. Okay. So basic logic is the same. What happens is the exporter sends the goods and the documents to that importer, and the copies of those documents are given to this factor. There are two types of factors. One is export factor, second is import factor. Okay, that's a separate topic altogether. I have taken it separately. Just type on factoring and forfeiting on Adda 24/7 and you will find it. Okay, so these are the two methods for financing exports. Guaranteeing payment of a bill of exchange is called. What is this guaranteeing payment? Means bill of exchange is itself a payment guarantee. Here I'll explain you. If this is the exporter, okay, and this is the importer, so what happens? This exporter will wants to send goods to the importer. He wants, here he hasn't sent. He wants to send goods to the importer, but the problem is exporter doesn't trust this importer. It may happen that the goods are sent and the importer doesn't pay. In that case, what happens? There is a document called as bill of exchange. Many of us know this bill of exchange, similar to that of the check. So here the exporter draws the bill of exchange. Here it's exporter signing. He tells the importer, this is the importer, he tells the importer that pay me after so and so days. Okay. Now this is a normal transaction. But what happens if the exporter doesn't trust importer? Then the exporter says, I don't want your sign only. I want the sign third stamp over here and sign of your bank. That bank should guarantee me means in addition to yours. So bank will guarantee in addition to the importer. So this process is known as what? This process is known as, who knows it? Who knows it? It is availization. Availization is a important topic in trade finance. Here it is sort of guarantee. It is a guarantee given by the bank in addition to that of the importer to the exporter, stating that yes, if this guy doesn't pay, I will pay you. So that is known as availization. Okay, means it's sort of guarantee. Keep it that simple. A factor would finance generally -% of the invoice value, while forfeiting could be done for the value of the invoice, full value of the invoice. What did I say? Just see this: factoring with or without recourse and forfeiting, right? Factoring is generally done to, it depends on the bank to bank after all, but it's generally done to 75 to 80%. 75 to 80%. And forfeiting is generally done 100%. Okay? Very huge risk in forfeiting. So factor will generally finance. Factor means what? It's a bank actually. But what happens is factoring can be done by anyone, not only bank. In fact, it can't be done by the bank. It can be done by the separate companies. Here you might be seeing the factoring business going on in SBI also, Canara Bank also, PNB also. But if you see, the factoring is not done by these banks. They have separate subsidiaries. They call it SBI factors, PNB factors, Can Bank factors. Okay, and these companies do the factoring. So factoring is generally done by the private agency. Okay, so factor would generally finance 75 to 80%. 80%. Okay, got it everyone? So factor means it is a export factors. Here again I'll explain you. This is the exporter. Okay, this guy will give the documents to, here this is the importer. It is the open account basis. Okay, so exporter sends goods, okay, to the importer. He also sends the documents. Here look at this, documents are sent by the importer by the exporter to the importer, and copy of these documents is given to the export factor. Then this export factor checks the documents, copies of those documents, and finances this guy immediately. There is a separate party of this person known as import factor, means it's a correspondent. Okay, import factor. So this export factor tells the import factor to check the purchase ledger of this guy. So whatever is there in the sales will have to be there in the purchase. So that is checked and that is confirmed by this import factor, and then this export factor finances the exporter. This is the way factoring goes. In fact, there's a further steps also, means importer will then give the payment to the import factor will deduct his commission, he'll send it to the export factor will deduct whatever finance it has done to this exporter and then give the remaining payment to the exporter. Generally the export factor finances 75 to 80%. Okay, got it? Now subscribe to Officers Adda 24/7 YouTube channel. In this channel you will be getting all the latest updates on JIB and CIB, number 1. And number 2, what are you watching right now? Knowledgeable free YouTube series, isn't it? Isn't it knowledgeable? Type yes in the comment section. Haven't you got many new items or new terms over here? Right? So knowledgeable free YouTube series. So if you are getting anything free, immediately subscribe to it. Click on the bell icon. Okay, So do this immediately because we are giving all the latest probable questions for your exam and these are useful to you. Now let me discuss the batches. See this CIB selection batch just now started. Even two subjects are yet to start. One is starting today itself. This ABFM and BRBL. BFM is just now started. In fact, you are having the recorded videos. 80% discount is going on. Mahapack will have double validity. What is a Mahapack? Mahapack means 15 plus batches per subject. Very cool thing. 15 plus batches per subject means even if you attend a batch even once, each batch, you will have a revision for 15 times. Okay, that's why do join the Mahapack. Okay, let me come to the show you how to use the code Y432 and get maximum discount. Go to Adda 24/7. In fact, if you are on the app, go through the app because in the app you are having 1% extra. Click on CAIIB 23. Look at this CAIIB 23. Clicked. Now you'll see the details. See this. The batches. Look at this. Target batch, selection batch, selection. Click on this selection batch. This has just now started. Okay. So selection batch. You'll get the details. See this. What are the dates? What are the timings? What are the study plans? Recorded videos are available 24/7. So you can attend these videos anytime. Look at the fees. Fees is 23,999. Now put the code Y432. Never forget this code Y432. Look at the fees now. Y432. Look at this. What are you getting now? Okay. This these details are to be filled. Hold on. Put the code Y432. Y432. Click on apply. Look at this. 23,999 reduces to 4,799. 80% off you are getting. And if you are on the app, you will get 1% extra. Okay. So that's why subscribe to this immediately. Okay. Join this batch. In fact, I was talking about Mahapack, right? What was that Mahapack? Mahapack means 15 plus batches per subject. Right? Let me show you Mahapack also. So the JIB, CIB, Mahapack on the front page itself. Click on this. You'll click on this CIB ka Mahapack. See this. You'll see the details. 15 plus batches for all the 4 subjects. Then mock tests are available. Videos, live videos are available. Tests are available. So only 2 months are remaining now. Not even 2 months. Okay. Look at the fees 7699. Click on more offers. Put the code Y432. Y432. Click on apply. Okay, what are you getting? 34,999 reduces to 6,999. 80% off you are getting. Validity double 6 plus 6 months. You won't get this offer every now and then. Join this offer immediately. I'll be back tomorrow with another series. Till then, bye. Keep studying. And do join the batches because exams are near, portion is new, you will be needing a guide, a mentor.